Hey guys, so in this video I want to talk about the long gold versus the Hong Kong dollar trade. So I had that trade idea on the 15th of June, and I actually decided to open and enter a trade on the 18th of June. So that green arrow, that's where I opened the trade, and that's where I set the stop loss. So you can see the entry was at around 10,504.49, and the stop loss was at 9,829. So essentially this, to me, the entry of the trade was, in summary, because it was a risk off trade to hedge against the market downturn, and also the trade war and political strife in Hong Kong. So the time frame would have been, let's say, around 1 year is what I would expect this trade to really play out within. In terms of my system objectives, this is really the first trade in my portfolio, so it was just about adding risk so that I can actually make a return on my portfolio. The correlation wise, there's really no other positions in the portfolio, it's just all cash, so not much to talk about there. Technically, when I entered, so let's do a daily chart. When I entered, it looked something like that from my technical perspective. Yeah, like that. So really, I was looking at this kind of long-term trading range where it's just gone sideways, and all the trend traders have been knocked off this trade because they just haven't been able to make any money. Because when all the trend traders are gone, that's when trends actually start to form. Also, I've been told. So you can see there's higher lows, which is the definition of a uptrend, and just an all-around decent looking potential breakout pattern to the upside. And I'd recommend going back to TMM number 2, which was the trade idea, for more information about that kind of stuff and the setup of why I decided to enter the trade. But really, I've entered the trade, and so far it's worked out quite decently, most likely due to the rhetoric of the Fed becoming more dovish. The sentiment right now probably is a little bit risk averse due to the trade war, but markets are also celebrating a little bit due to the dovishness coming from the Fed. Now, I'm thinking that there's a small chance that this trade will actually go to 20,000. So that's probably, if I was to really give it a potential number, I'd say it would be a 1 in 20 chance, and that does look quite crazy in terms of just looking at the chart technically, but from thinking about it, it's really just a doubling in the price of gold compared to the Hong Kong dollar, which I think is possible. I'd give it about a 5% probability, and more likely is that it'll go down to up to around 14,000. That's probably more likely. I'd say around, if I had to give a figure, which I'm trying to force myself to do, I'd say it would be around 15% chance that you see gold get to 14,000. Now, in terms of popping up a little bit more, I'd say within a year, probably a 30% chance that it can get up to 11,500. Now thinking about the downside, there's probably a 30% chance that it will actually come down here. So it is also very likely that you know, the price collapses down to 10,000. And I think I'd actually have a 20% chance of just getting stopped out at the stop loss here. So the idea for now is just to continue to hold the trade. It looks like it's giving me a pretty decent break to the upside. So I'm sitting on a nice little profit. So not quite at a 100% return on risk yet. So if we look at the risk, the original risk that I've taken, that's about 665 points, whereas I'm sitting on 423 points of profit. So not quite where I want to get yet, but it's looking decent, and I've only been in the trade for a few days, so it's always good when it starts moving for you straight away. So thank you for listening, and that's it for this video.